Rohr here with a morning update on Tuesday, September 23rd, 2014. We are not characterizing this as an early update because due to some technical difficulties, we are actually recording this into 9:30 a.m. U.S. Central Time, but it is instructive that the markets have already progressed a bit today. And there have been massive macro technical influences, of course, this morning. Well, it's been a very interesting market reaction to all of that, and after yesterday's weakness, which brought with it a down break below the 2002 level on the aggressive up channel on the S&P 500 future, the market also fed on itself on that weakness. So you can see by a little later on in the day, it actually saw the hourly MACD drop below its lower runaway band, which of course the more sensitive 30-minute MACD did by mid-morning. And that kept the pressure on yesterday. And the hourly remaining out below that lower runaway band, in fact, is a troubling sign in spite of the bounce back. But what we have to say is that so far, at the very least, this slippage this morning that actually got down overnight into about the 77 area, by the time the market opened was right around 1980, and we had been focused on 1982 to 1980 as support. The market's now back above that, but we have to see whether it can stabilize and continue to improve, especially as higher broken supports were 1990 to 88, and you can see how that restrained the market yesterday, and also up at 1998 to 2000. And at this point, of course, including the congestion and down break at 2002. So a lot of resistance above, but also key lower support into the 1978 to 75 area on lead contract levels that are very important on the weekly chart. So those are your supports and resistances, and the burden of proof being on the bears to get this market to break some further support. The longer it stabilizes, no worse, especially than 80 to 82, the more so this hourly MACD is likely to clean up, and the hourly stochastic is likely to turn to the upside, even if just for a correction back up toward the major gap now, and down breaks and violated support in the 1998 to 2002 area. That pretty much does it for the short-term view of the S&P 500.